Harmony, it's time to do an update. We want to look at the fundamentals and the technicals today. Harmony is a powerhouse project. I think it's currently top 100, top 100. So if you like today's video, like, subscribe, hit the bell notification because I want to bring this value to you. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro in Trading Currencies for over 15 years. And I bring that knowledge and wisdom to you for the crypto markets. I was featured in this best-selling book back in 2008 after I just finished my career in teaching math, high probability trading strategies. Some wise stuff in this book, wise stuff. But we're gonna focus over here. So let's dive straight into our charts. First of all, we're gonna start with CoinGecko. I use CoinGecko or CoinMarketCap, both brilliant, free sites, free, amazing content in here or amazing information. So I've just typed in Harmony. The ticker symbol is 1 ONE in the search. Now, Harmony is currently a top 100 coin, is ranked 93 as far as market cap goes. The market cap is 635 million. What does that mean? It means total circulating supply of their tokens, which is 10 billion, times their current price gives you 635 million. So we also want to look at, just quick recap, on all-time high. Harmony has been as high as 22 cents. So it's been almost four times higher where it is today. So it's 72% lower than its all-time high, and its all-time low back in March of 2020 was 0.001. 0.001. That is 60 times. So it's moved up 60 times since then. And great projects go through that cycle from baby becoming an infant and then grows, and now it's a top 100 coin, right? Top 100 coin. Let's click on white paper. White paper, I haven't actually looked at this. Let's just have a quick glance. Technical paper, okay, this is gonna be very technical. You can see I'm not a technical guy. I'm a technical analysis guy, but this is really, really technical. So let's not jump into that white paper. Let's jump into their website. I have their website open. Here we go. It's over here. Website. So Harmony, scaling Ethereum applications and cross-chain finance. So what they're focused on really, we did a nice comparison down here in protocol features. Protocol just means their code, what their blockchain is all about and how they're developing everything. The transactions are faster. That's what they're focused on. 2 seconds versus 6 minutes against the current Ethereum. And they're comparing it against Polkadot as well. So they're saying we're faster than Polkadot. Polkadot's going to be 12 seconds. They're going to be 2 seconds per block. And then the other thing is going to be fees. The fees are going to be the same and are the same as Polkadot, but much cheaper than Ethereum. Not that much more cheaper than Ethereum 2 and Cosmos as well. They've been around since June 2019 in terms of their mainnet launch. So Harmony. It's a great strong project. It's been in the top 100. Anyone that's in the top 100 is going to be strong. It's going to be strong, right? So they've got a strong team, but the main thing is we want to know is scaling Ethereum applications and cross-chain finance. What does cross-chain mean? Well, different blockchains, it allows them to communicate. So Ethereum can communicate with Binance Smart Chain, can communicate with Polkadot, can communicate with Polygon, can communicate with Avalanche, can communicate with Solana, can communicate with ADA. So it's cross-chain, right? And that's going to be a big challenge, and that's been a big problem that's being solved by many companies at the moment, Harmony being one. But today, let's jump into the technicals. Remember, technicals are all about the psychology of the markets, fear and greed, optimism and pessimism. That's what it's about, right? So we know how strong the project is, but people short-term, medium-term, less than a year, less than 6 months are buying based on price action, fear and greed. So this wave count was the last one that we did a while ago. It would have been roughly around May 23rd. We said this was the potential wave 2 low. Now, the way we work is we have a strong opinion of the market action in terms of psychology based on the information we have today. But as the market unfolds and give us more information, we have to adapt our thinking to say, oh, okay, this doesn't look like the wave 2 low. Why? Because we made a lower low. So we need to reevaluate. So let me just get rid of these waves over here. So you see like this. We'll get rid of these just to keep it clean. So what do we reevaluate? Well, let's get rid of that chart. Let's get rid of this bump. So we do this. So now saying this looks like a wave C of a wave 2 low down here. I still got a question mark because it hasn't been confirmed, but we can do some really intelligent things right now, which is Fibonacci retracements, extensions, price alternate price projections, and we'll do a bit of time analysis to see, are we at a high probability wave C of a wave 2 low? So again, just to make sure you're really clear and we're on the same page, big wave 1 up, right? Really clear, right? And then a big wave 2 down. Boom. And this wave 2 seems like it's breaking down to a typical 3, which is classic, is a A, B, which is broken down to an ABC itself. That's really clean. And then down to the downside, boom, this next one. So let's do some Fibonacci analysis, right? So we can do the first on the macro picture. We want to measure this low. I'm going to do it here so we can get a really good picture of where we're at. Where are we? 50%, 62%, 78.6% is our typical price zones. We can see we shot past the 50 and the 62, and we're at and close to the 78.6. So we can take these off, and 78.6. That's a typical maximum level of a correction for a wave 2. But that by itself is not strong enough. We want a confluence of events. So we want to drop down a wave count degree. So it's the macro wave 1 and wave 2. Now we want to drop down to the ABC part of it. That's the intermediate count. There's a relationship between this wave A and the wave C. And the most common relationship is that wave C, more often than not, equals wave A. So we're going to measure wave A. This is called an alternate price projection. I was tongue-tied a second ago, trying to remember this name. Alternate price projection. Boom. 100%. That's where 100% is. And the typical maximum is 1.618. It's going to be so far down, it's irrelevant. And the typical minimum is 62, but that's way up here. So we're looking for a confluence of events, a cluster of 2 degrees of counts. We've got a nice cluster over here. Another confirming indicator from a Fibonacci standpoint, and these are all related to that golden mean 1.618, is going to be the 1.618 and 1.272 external retracements. You can see it's right there and right there. So we've got that right, nice clean zone. So we're saying this is a high probability price zone that we have over here. Perfect. Now over here, there's not a really clean count. There's not like a really clean wave count other than, you know, we could say a 1, 2, 3, 4, and then it's got this 1, 2, 3, 4, 5 over here, but it's not that clean. So we're gonna keep it quite broad, and we just keep it on the 2 wave counts, the macro and the intermediate, right? The macro 2, and then the A, B, C of a wave 2. So we've got this nice zone over here. Then we're going to do some time analysis. Now, this is where we're taking the wave 1, beginning of this wave 1, right? Because it's the most obvious impulse that's moving up. Could take it from here, but it's kind of flat down here in comparison. It's like how you want to think of it is there's been a change in the buying behavior. Yeah, something happened on February 6th that caused a change in the buying behavior. So what we're going to do is we're going to do time analysis, typical minimum time retracement. And we want to make sure that the correction has gone past the 50%. So what do I mean by 50%? All right, 50% is here. So this is this move to the upside. 50% of that time is on April 22nd, but we can see that we haven't had our 3 waves. This at the time kind of looked like an ABC of a correction, but it turned out not to be. So we can kind of get rid of this one. And then this is the typical maximum of 100%. But again, the pattern hasn't coincided. And then the maximum tends to be 1.618, which is the next time zone, which is over here. So that gives us the broad time period that we should expect our correction to finish. Right? But that alone is not good enough for us. What we need is something else. And the next thing that we need is a alternate time projection. We're going to measure how long, because the markets have a rhythm, right? It dances, it kind of moves to the beat, and it continues at that beat for a while until the rhythm changes. And it's normally dynamically associated with 1.618, that Fibonacci time and price, or time in this case. But this time, what we're going to do, the rhythm, is measure wave A. Did you like my dance moves, by the way? I used to be a dancer, believe it or not. I used to do break dancing. If you want to see my break dancing video, let me know. I will post something. You probably don't. You just want to say, just show me how to make some money. Right, we're going to measure wave A, and we're going to project it from wave B. And wave C often would mirror wave A in terms of time. You can see it clusters in this zone. And then the next one is 1.618 of wave A. So this is like a nice time and price zone that we have now. There's quite a few other things we can do. So it looks like, just looking at this right now, but we're going to jump into, because we've got pattern, we've got price, we've got time. We're going to jump into momentum, which will give us some valuable information to see, have we actually made the low or a high probability low of Harmony? And we should go on to expect higher highs. You know, what are the key price elements? Well, we want to break and close above this high, and then we want to see a break and above close this high, and then finally a break and a close above this high, right? They're going to be the three major zones. But you can do some buying action in this space. But if you're already holding Harmony, this will kind of give you a bit of an indication of where we're at. So let's just jump into the weekly chart. I'm not too focused on the price data. What I'm looking at is the momentum indicator. Just want to double check the settings. Yeah, it's the fast one. We can see that the weekly is oversold. So the weekly chart, the downside movement should be limited. Like, we've been in the zone for a while, so we should anticipate a bullish reversal over the next couple of weeks. And then let's pull up the indicators on the daily chart, right? Let's pull up. I use 2. And what I'm looking for is what gives me the best information when it comes to these lows over here, right? What marries up quite nicely. And both of them are doing a pretty good job. Let's have a quick look. Yeah, the bottom one does a better job because it's cleaner and it's less choppy. This one's quite choppy, which can be a bit misleading. This one's catching the major moves. There is one other setting that I like. Well, there's 2 other settings, but this one I'm going to just check. This one here. Yeah, that's not that useful for us. And there's one last one I just want to check, because we're just looking for one that gives us valuable information. So the one that I'm going to choose that gives me the most valuable information is this one here. This low marries up nicely. This low marries up nicely. This low marries up almost like bang on. And this one here. So what we should anticipate is on the next bullish reversal where the indicator goes down and then momentum goes up. It's kind of the momentum, the direction. It's a lagging indicator, but gives us important information. Should coincide with the low. So we might see one final low being made. Test this low over here. Next bullish reversal, we might make the final low on Harmony of a wave C of a wave 2. And then, yeah, and it'll probably be in this price zone. I don't see it going much lower than the cluster of, what is it? It's 4 or 5 cents. 4 or 5 cents. So there you have it. Harmony update. We've got the fundamentals. We know it's a strong project. We know it is a scaling Ethereum applications, or scaling Ethereum applications and cross-chain finance. Finance is huge in the blockchain space. If you ever heard the term DeFi, decentralized finance, it's basically finance on the blockchain. Borrowing, lending, staking, interest, APYs, mortgages are moving over to the blockchain. Insurance on the blockchain. Anything to do with money that you traditionally do in the real world is now happening on the blockchain, and that's going to be one of the biggest innovations. Because why is it such a big innovation, by the way? Is because the cost of trust is 10,000 times cheaper. The cost of trust is 10,000 times cheaper. Like, we don't need these banks and solicitors and so on and so forth, all these middlemen in between. We can just go direct peer-to-peer. That's why it's cutting out a big chunk. So the efficiency is going through the roof. It's like thinking about Blockbuster Video. We had to go to your rental store, you have to drive there, walk around, choose the video, go to the counter, queue up, then buy your video, then you gotta go home, you gotta rewind the tape, make sure it's rewound. You know, it's very inconvenient if you think about it. And now Netflix, using the internet, the transfer of data became much more efficient. It's almost 10,000 times more efficient and more cheaper. So Netflix just blew Blockbuster Video out of the ballpark. And that's what's happening here right now in blockchain. And that's what this early innovation is going to play such an important role in the world as we know it today, and the world that we're going to experience in the next few years. This is going to become the norm. So let's finish on a quote. What's the quote today, Jagir? What's the quote today? All right. This is chapter 5 from this book, The Winning Investment Habits of Warren Buffett and George Soros, written by Mark Tier. I just found this randomly on my bookshelf. Must have bought it like over 10 years ago. But it stands the test of time. Let's read this. The market is always wrong. That's what it says. That's what it says. Wealth is the product of a man's capacity to think. Man and woman, obviously. Ayn Rand. A-Y-N is his name. A-Y-N. Ayn, I think it is. Wealth is the product of a man's and woman's capacity to think. And then the next one is, most men would rather die than think, and many do. Bertrand Russell. There we go. We're just going to finish on this habit. I mean, it just kind of goes into a bit more detail. Develop your own unique investment philosophy. The master investor has developed his own investment philosophy, which is an expression of his personality, abilities, knowledge, tastes, and objectives. As a result, no two highly successful investors have the same investment philosophy. Wow, that's deep. The losing investor, which is the majority, is always going to be 80 to 95% of people, especially retail, is going to lose, going by probability. So we don't want to be on that side, right? The losing investor has no investment philosophy or uses someone else's. It's deep. It's deep. All right. That was deep. I only read that for the first time today. Woo! If you like today's video, like, subscribe, hit the bell notification, share this video. Let me know technicals, fundamentals, what do you want more of, what coins you want me to look at. I will deliver for you. See you soon.